Welcome to SmithWeekly Discussions, an occasional program for our members of SmithWeekly Research. Please note this program is a private discussion and everything contained herein is for entertainment and educational purposes only. With that, we hope you're in a comfortable position along with your favorite beverage to enjoy the discussion. We remind our audience to examine our show notes attached to each of our shows to better understand how our program functions. Before we get into our discussion, we want to say thanks for questions coming from our audience of SmithWeekly, including Paul M., Anthony C., John L., at Kalaluma, Anthony N., at CapCent Research, and J.E. On the program today is a returning guest. Mr. Mark Chalmers is back with us on the program. Mark is the president and CEO of Energy Fuels. The company is focused on production of uranium, rare earth elements, and vanadium through various conventional mining and in-situ recovery projects, through rare earth separation processing agreements, and through potential future production through its pipeline of projects in two primary jurisdictions, United States and Australia, with other jurisdictional exposure to further projects in Madagascar and Brazil. Energy Fuels is also exposed to the medical isotopes business through further processing of mined materials, such as the extraction of radium. Energy Fuels' production efforts are centered around its White Mesa Mill complex based in Blanding, Utah. The company is listed on the New York Stock Exchange under the symbol UUUU, and also on the Toronto Stock Exchange under the symbol EFR. Mark, thanks for coming back on the podcast. Welcome.
Hey, Andrew, it's always a pleasure, and it's been a while since we caught up. So I really appreciate you setting this up so we can catch up on all the happenings, not just with Energy Fuels, but the general market when it comes to uranium and critical minerals.
Mark, thank you for that. It's been a while for sure, and you've been busy over there at Energy Fuels on a number of different battlefronts, and kind of actually lucky timing here on getting this set up with recent news that came out of the gate here just post WNA and at WNA as well, which we have lots to cover on all of that front, but I do want to just stop for just a second because you're absolutely one of the CEOs and one of the company leaders that's actually worth talking to about market events. Many of them aren't worth talking to, but you are. And so with that, you just came back from WNA. There's been a few movements. We've got upcoming elections in the United States, which could change out Department of Commerce, Department of Energy, some of those dynamics that are playing in here. Fairly stagnant market, yet quite good from our desk. But just talk about the immediate things that you are seeing recently that's adding to the Energy Fuels story.
Well, I mean, I'll start with WNA, very well attended. Certainly the focus and bipartisan focus on nuclear energy globally, continues on, which I think is very important. People recognizing the need for base load, low carbon energy sources. So that is continuing on. I think there also is kind of a recognition that as the uranium nuclear business continues to grow, how are you going to replace the pounds that are mined out? How are you going to get the conversion and enrichment? So I think it all bodes well. I think that, the softening of the uranium price, at least the spot price, certainly, put pressure on a lot of the equities downward, which we've seen with other critical elements and energy transition elements. So, I mean, I think that coming out of WNA, I think the message is clear that nuclear is going to play a major role going forward. And certainly, as you know, we have a long history with uranium production. I have globally of producing uranium to be able to fill those increases in demand and replacing pounds that get mined out of some of these other projects as they come to an end. So, I mean, I think we're in an absolutely great place. And Andrew, as you're aware, we have this bolt-on called rare earths, and the recent, announcements of our advancing the close of Base Resources, extremely exciting for the company and our shareholders.
Appreciate that. Lots of things happening here. And I think many of us, although there's, of course, some out there that would say that they already predicted all this, we know that's not true. But I don't think any of us would have expected to see these types of conditions. Such a disconnect in the equities, yet such a good setup for the uranium market, for commodities in general, with a market overhang, a broad market overhang that is also playing into this as well. And so it's an interesting just cocktail of ingredients, I suppose, at this point, but all very positive if you have the wherewithal and the solvency to stick this out. I think it's going to work out really well, and specifically to Energy Fuels, even more so on certain initiatives that are getting done, and there's lots of milestones left, but things are being progressed well. With that, I do want to talk first on the acquisitions front, and then I want to move into operations. But first, on Base Resources, you just mentioned it, the acquisition that is nearly complete with approvals in place. Talk about the transaction and what the plans are to fit the assets of Base Resources into the Energy Fuels strategy.
Base Resources, when we got into the rare earth business, and with a focus on monazite sands, it became very obvious early on that the sourcing monazite was going to be difficult if we didn't have our own mines to secure the monazite from. So we did a global search of the entire world for heavy mineral sand projects that were of high quality and also included monazite that we could benefit from at White Mesa. And we used a group called TCMI out of Perth in Singapore to help us out. And they had a database of 70 some projects globally, both either developed or needing to be developed. And they came up with a short list for us. And then we drilled down into that short list, and we came up with effectively a top five. Number one on that list was Base Resources with their Toliara project in Madagascar. Number three was really the Donald project in Australia that we have a joint venture on. So we had a very focused scientific approach, specifically targeting world scale and low cost, quartile one cost globally. So we went out and we came up with the agreement to acquire Base, and now the shareholder vote is complete, is overwhelmingly supported the acquisition, and the courts in Australia have ruled that all the proper steps were done, and Base delisted in Australia. So we still have until October 2nd for the actual close to complete. It takes we're issuing about 16.5. The Base shareholders will own about 16.5% of the Energy Fuels shares, which at current prices is somewhere in the order of about 170 million of our paper, and we secure a company with great people, great expertise, great momentum, and the Toliara project in Madagascar.
Appreciate that, and very close to finishing this up. Interesting comments on the search, and I appreciate your guys' work to look at how you do this and how you basically, Mark, I think the point is here is self-determination and not having to rely upon other owned sources of feed for the work that's going on with the rare earth mineral separation at White Mesa. I think that makes a lot of sense to be able to secure your own future in that way. And even if you have to pursue outside U.S. jurisdictions to do that, obviously that makes, in my opinion, the most sense to do so. And also with your guys' operating expertise, your expertise specifically that does go beyond the U.S. and into many other jurisdictions, probably you can count on two hands. So I do appreciate the comments there. With that, I want to tie right into Donald and have you talk a little bit about joint development partnership with Astron and the Donald Rare Earth Project in Victoria, Australia, and where you see this fitting also into that pipeline schedule and the key benefits to Energy Fuels.
Okay. Well, yeah, and I will, but I just wanted to close one more piece off with the Toliara project that we're waiting to get final approvals from the Madagascar government, which we think is well advanced and will happen quite quickly. But to put it into context, just before we go to Donald, is we believe, based on the feasibility work that Base has done, that the Toliara project is world-class, world-scale, low cost. And based on their feasibility work, it indicates that the project as a heavy mineral sand and a rare earth project could spin off between 300 to 400 million per year of free cash flow for like 38 years plus. Okay, so just to let people know the scale of the possible opportunity. So a very, very, very material in the world of all things heavy mineral sands and rare earths. Now, Donald is also known to be a very large monazite deposit, which has been fine grained, and it's had those some technical issues going back over the last number of decades. And but we believe that has been largely resolved, and it's in Australia. So we have a joint venture that we've signed with Astron, and we earn over time, over steps, but we have to get through a final investment decision, which we've committed about $15 million to go through those steps to secure 49% of that project, but 100% of the monazite. What's really exciting about it is that we also have access now to the Base Resources team of technical experts that have successfully developed, built, constructed, and reclaimed a heavy mineral sands project in Kenya. And we already have them helping us with working with Astron, going through those steps through the final investment decision. So right now we're into the final investment decision, and with the assistance of the base support, and when we complete it, there'll be a decision point whether to continue on or not. We believe we'll be continuing on at this point in time, and we believe it's an outstanding security of supply in the package of projects that we've put together over the last year and a half. So we've committed to fund up to about $120 million, again, assuming you get through the FID process, but we don't have to spend that money until we go through these final reviews on things like recovery, sampling, costs, capital costs, and all the things that you have to do to make an informed decision.
I think that goes to show also how these two projects are tying together and how these two transactions can make some sense here. And it appears that they are fairly de-risked with respect to potential regulatory hurdles. So that sounds good there, Mark, and looking forward to seeing the progress on these. Now, with these two deals in total, Mark, and the fact that, you guys have a lot of things on the plate, there's no doubt about that, but there's been a lot of good execution so far on these different initiatives. But what are your concerns with execution risk with some of these new jurisdictions for the company, the capital expenditure requirements in the years ahead, really, and how you see that being funded from, in part, cash flows from other operations and also financing mechanisms, risk on the balance sheet? Do these transactions stretch the company thin?
When you look at the scale, yeah, it would stretch it if everything hits at the same time. I think what a lot of people don't understand is that, okay, the base deal was a paper deal. They're getting a dividend out of their treasury of $55 million to their shareholders. We secure a complete project team that knows how to profitably operate in the heavy mineral sands space. And but now we're also able to utilize them with the Astron deal and the Donald project in Australia and their expertise. So we've got a complete, proven project team that is highly respected. And they're also working on our Bahia project, which is still in exploration mode as well. So we, Energy Fuels, doing this combination with Base, was able to get a team to help us with all the heavy mineral sand sourcing and monazite of these projects. And don't forget, we still have a relationship with Chalmers in the United States. So we have bolted together like 4 different potential sources of monazite, heavy mineral sand going forward. Now, these pieces to the puzzle will require cash at some time and investment. Just thrown out a number, and this includes modifications at White Mesa of $1 billion plus. But we also believe that the scale of this, what we've been accumulating in projects, is sort of in the same order as, in due course, when we get this executed, the equivalent of Linus. Now, Linus has a market cap about $4 billion, even in a low price environment in the rare earth sector. So we have a strong balance sheet, as you know, a couple $100 million. But each of these things are going to require final investment decisions that, are going to be, 10 million, 15, 20 million. So we have the balance sheet to withstand that. And then as we get the final studies done, we'll be looking at the same time on how to finance it. Now, there is a number of initiatives, as you know, in the United States, in Australia, for non-recourse financing for critical mineral projects. And we believe we have put together the most significant critical mineral portfolio in the world outside of China, with project teams that do both the hydrometallurgy and the physical metallurgy of the heavy mineral sand business and monazite. So it is a very unique play that we put together, but we believe that, build it and they will come. We believe that the non-recourse financing will be possible. And we also believe that there are a number of parties out there that have watched us put this together during a period when the markets were down, and they were surprised that we did it and accomplished it. So I'm not concerned overall with financing over time, but we don't have to do every piece of this puzzle at one time.
Mark, and with that, just fill in as a follow-up here, looking at schedule, looking at the different projects, both on the uranium front and on the rare earth heavy minerals front. Talk about just how you see some of this slotting in. I know it's very subjective in its early stage here, but just to give folks an idea of how this really gets layered in, and obviously that supports how it gets financed. But just talk about how you see the first project kicking off, maybe what you see as the second project, and then the time frame, because it looks like to me that this is something that'll probably be done over the next roughly 6 years is my suspicion, maybe a little bit less than that, but just talk about that to give us a context of schedule.
Yeah. Well, I think that what we've done is we're proven in the uranium space and being able to produce uranium, but we weren't proven in the rare earth space being able to separate into the NdPr and the samarium plus. Well, we've proven that now. We built a separation plant, commercial scale separation plant, and we've commissioned that plant, and we've proven that we can separate on spec material at the same kind of basic level as the Linus is right now. But we don't have a lot of additional monazite right now. So we've proven that. We built the facility. It was $16 million for the facility in our existing solvent extraction building. It's very impressive, very good quality, and we can't be happier with what we built there. So we've acquired these projects that require, as you said, a number of years to get them into operation to feed the mill with more monazite over time at world significant scale. But we have stopped processing the monazite at the mill. We're already feeding in various forms of alternate feed into the mill to get this whole uranium cycle going again. So our plans are to be producing material quantities of finished uranium products in the last quarter of this year. We still have inventory. We have a significant amount of feed at the mill to start running the mill, and we'll run that mill, and we hope to run the uranium mill as continuously as we can going forward for a decade. Okay, that's our objective. Meanwhile, while we're having the revenue from the uranium side of the business, on the side, we're getting these projects fully permitted, approved, final investment decisions, having base focus on what I call the lower hemisphere. And as we need capital, we will construct these projects and put them into place. So the uranium plant is running full tilt. We've got 3 mines operating right now. We're looking to increase and add the Nichols Ranch project and the Whirlwind project and other projects. So the momentum on the uranium is happening. On the side, we've got base resources to help us with the heavy mineral sand projects and the world-class Toliara project. And so there are these moving pieces, but they actually are somewhat separated from each other. We believe that it's again something that hasn't been done. We're able to use the uranium business to base load and provide revenue at this point in time, while off to the side this rare earth initiative is building speed. Now we are moving forward with engineering a separate rare earth production facility at White Mesa, and we plan to have that fully engineered, permitted, and constructed around that 2028 period, which, as you said, is looking out 3-4 years, and we'll have both processing plants at the White Mesa mill to accommodate the future supply of monazite coming in these very large quantities.
Mark, thank you for that. And I think that gives us a good context of how to look at this and how to, for the folks out there that want to put together some of the potential models here on how the cash flows look and how that layers in, you can start to get a little bit of a context on how that comes about. One of the things I wanted to add here, and we'll get back into some of the operational stuff you just mentioned, but I want to come to that in a moment, just to finish up on transactions. The RedTran LLC transaction, medical isotopes, target market. Talk about this one and how you see the monetization flow here, because the existing U.S. operating projects, as you well know, have some of them have radium that's coming out as a potential byproduct that could be extracted and moved into this target market. So talk about the importance of this. I thought it was a pretty good one.
Yeah, well, it is a very unique one, and and I've been talking about a critical mineral hub that has not just uranium, not just the lithium. We're not in the lithium business, not just vanadium, having these multi elements, and in total, it's around 10 elements that we think we can harvest, and radium 226, radium 228 are a couple elements that we believe we can harvest. So when we're processing the uranium, or we're processing the monazite, we solubilize these different elements, and there's been emerging demand for radium. And yeah, right, we provide a source of radium potentially at the White Mesa mill. We have a research and development license. We're building a pilot plant. We have the licenses to recover radium. But in the meantime, there is a new form of cancer treatment that is, in addition to the traditional radiation treatment and chemotherapy, is called targeted alpha therapies. And it's a very exciting area where people can be treated more effectively with higher success rates. FDA approvals are ongoing right now as we speak, but they need sources of radium in some of the decay products to make those drugs. And the key feedstock is radium 226 and radium 228. So we have, and I hate to even say it because it's a lot, we got like over 10 different groups that are talking to us about radium from the White Mesa mill. And we have radium. We have to prove that we can do this with this initial pilot scale plant and build a commercial plant. But I can tell you, even though I tell people we've proven we're a uranium producer, we've proven that we can do the separations of the rare earths, we haven't proven that we can economically do the radium. But the radium is potentially every bit as significant of a revenue stream as our uranium business, and potentially even the rare earth business. So it's in the development mode. Let's leave it at that. But White Mesa has the permits, the infrastructure, and the know-how to process these various streams and recover them. Why not? It's like harvesting the whole hog. Why not get everything you can recovered if it makes economic sense? Now, if it doesn't, we won't do it. But that's why our story is so different than anybody else's story that you will talk to, because nobody is trying to do the things that we're trying to do. Now, we did acquire RedTran, who has a number of patents for recovering radium, and we saw that as an ideal acquisition to at least advance that strategy to make sure or see if we can get it to a commercial conclusion.
Mark, thank you for that. I'm excited to see how that moves forward as well. And these byproducts are already there, and if it makes economic sense to pull it out, or in some cases, if it's easy to pull out and set aside, like vanadium, for a future better price, that seems to work pretty well here. And I think you've been able to demonstrate that expertise on the vanadium front. And we'll leave vanadium. I don't have any
Yeah.
comments there, and probably don't need to discuss it at this point because we have other things to discuss. But
Just a
yeah,
quick one. Sorry to interrupt you, but we believe that the value of a gram of radium 226 is around $6 million a gram, just to give a little bit of context into the value of radium. Now, it's a very small market, but it's a very big market of interest for these pharmaceuticals. So, yeah, watch this space. I hope to have more information on that, perhaps the next 3 to 6 months, which could be very exciting. Okay, now I go to vanadium.
let's leave vanadium on this one. I appreciate the comments there on that and where this could potentially lead because some of the projects already have this as a byproduct. So if it all makes sense from a separation standpoint, this sounds really good to progress this as well, because it's just another cash flow stream. And as you know, in the commodity markets, to be diversified, you can survive way better than just a single commodity because we know these cycles, we know how they go, and most of the time they tend to work out with the same outcomes, even though the timing may be a little bit different. So I appreciate the thoughts and comments on that. I'd like to get to the operation results now and then get into U.S. operations specifically, Mark, but just cover off for us and maybe for some of the audience who hasn't got through the quarterly results yet, and we haven't spoke for a while anyway, but cover off the most recent quarterly results, where we stand on the balance sheet, and how you see the rest of the year coming together on operations.
Yeah. Well, I don't have those numbers in front of me. I think we posted like a loss of about $6 million for the last quarter. But when you look over the last 6 quarters, last year and a half, we've had net income of around $100 million, through sales of uranium and the sale of Alta Mesa. So we've been more profitable than what I think any one of our peers in the uranium space. At the end of last quarter, we had approximately 200 million of working capital, and that's a very, very strong balance sheet, as you know, Andrew. We have zero debt. We have about $1 billion worth of assets, replacement value of assets, if you look at the mill and some of these projects. And we've got a building revenue stream with the restart of these mines. Now, it does take time to get the mines restarted, and we've been restarting these mines for the last year and a half, and we're producing ore at 3 projects right now as we speak to be stockpiled at the White Mesa mill for processing. So, but it does take time. You have to hire people. You got to get things going. So I think when you look at our balance sheet and the zero debt and the 200 million bucks, and the fact that we have mines operating that didn't require a lot of capital, that's a big differentiator. And that whole story is building up. Financially, we're in an enviable position. But yeah, happy to go into details on that, however you would like to go into.
No, I think that's good. And the audience can refer to that specific release there. And I think it's just to demonstrate that, the company is in a position where cash flows are rolling in. There's CapEx, there's expenditures, there's things like this that are going to vary quarter by quarter, but it is in a different position than your U.S. peers for sure. Some of those U.S. peers, we haven't seen enough information yet to be able to determine how that true financials are working out because of obviously the complexity of long-term contracts, speaking of uranium, and the fact that you don't get to see the truth of those private contracts until we start to see the financial results. And so that's going to be interesting to see here in the coming quarters. But I think it's suffice to say that this company is in a far different position today, and obviously with a growing cash flow profile going forward here. So just with operations here, Mark, you already talked a little bit about White Mesa and the planned expansion work that'll happen, somewhere in that 26, 27, 28 timeframe as far as the different sequences, financing, and then construction start, and then completion. Maybe you can expand just a little bit on that, but specifically at White Mesa in the nearer term, is there any additional operational improvements and achievements that you would expect to be completed as you guys progress towards that separate rare earth expansion project at White Mesa? Any further comments, work at White Mesa?
Well, the uranium circuit is intact, and we've been sharing the uranium circuit with the rare earth circuit, but we're now just putting the making those modifications back to where the uranium circuit is fully functional, we don't have to do really much on the uranium circuit. So not really much has to happen at White Mesa in terms of modifications to go back into uranium processing. As I said, we're starting the engineering for this separate rare earth circuit that will be next to the uranium circuit, and that will be front and center to get that fully engineered and in for to the state of Utah, which will require some permits, but not as many as most would have because we've got this existing site already permitted and dealing with the radioactivity. So, but to feed the mill, whether the 3 conventional mines we have going, I'm happy to give you an update on how those are spinning up to feed the mill. And as I said, if you go to the mill today, you'll see ore trucks coming and going and dropping, feed off at the mill for processing later this year or into next year and onwards.
Always happy to see the stockpile yard get filled up. So that's absolutely great, Mark. So appreciate the comments there at White Mesa. And yes, I do want to get into the conventional projects in a moment, and we'll cover off some of those. With Nichols Ranch, there was an announcement recently that you guys are looking to get Nichols Ranch in situ recovery project restarted, as well as wellfield development and expansion. Talk about this announcement and when you can, again, a little bit subjective here, but tell us a little bit what you can about when you see maybe that first production coming out of this restarted facility, as well as any other plans at Nichols Ranch.
Yeah. Well, we're back doing delineation drilling in the wellfield areas, and we've started off and got some very exciting results, some very high grade intercepts, which is very encouraging. We're going to do the wellfield planning work, but we first have to do the delineation drilling, which we're doing. Nichols could be back into production mid next year or thereabouts, depending on how the market continues to evolve. But it's certainly a very significant asset for us, and so we're restarting the drilling. And one of the things, and I think I may have mentioned it to you in the past, Andrew, that as we build our contract portfolio, and we added a 4th contract just a month or 2 ago, and we get that trajectory extended. The thing about a ISR project is you have a lot of drilling. You have to put in the well fields and header houses, and it takes 2-3 years to get the uranium out of the ground after those are put in, and then ultimately you have to restore it. So you have to look at the ISR projects on quite a longer time frame than you do with the conventional mines. So one of the reasons we like the conventional mines is you can mine a ton of ore, you can leave it in a stockpile at the mine, or you could ship it to the mill, and you can figure out when you exactly want to process it, and you can start and stop much easier than you can an ISR project. So one of the delays in Nichols Ranch has just been that you need to be looking at a probably 10-year plus horizon to really get the full value out of producing from ISR pounds. So we have that different modular kind of approach with some of the conventional mines. So sometime middle next year, market supporting it, do the drilling, do the planning, do the installation of the well fields, and turn on Nichols Ranch into commercial production when we choose to fill both our existing contracts and also be able to produce uranium that we can sell on the spot market, like we have been doing through the course of this year to complement our contracts.
Good update there on Nichols Ranch, and looking forward to seeing the progress there. And you guys have been, to the best of my knowledge on this, you guys have done a pretty good job with opportunistic sales utilizing the spot market. Then of course you guys have backstopped with a term contract book, which is still building out, which is, I have to give you some credit there for not sucking the company into term contracts that make people look like idiots today. So I appreciate that, and just your guys' layered approach to this. I think it's been very intelligent, and I think that speaks to your experience in this business going back many decades now, and your overall time dealing with different operations, both ISR and conventional operations, not just in the U.S., but outside the U.S. as well, Australia, Namibia, and a few others. I'd like to move to Pinyon Plain, and feel free to jump in here with some of the other projects. We'll talk about that in a moment. But on Pinyon Plain, this is the primary source that I'm looking at the moment. But there's obviously some other operations that are firing up. But how are operations going there? And specifically, are there any issues on the transportation front through Navajo lands?
The spool up of Pinyon Plain's gone extremely well. It is the highest grade underground uranium mine, I believe, in the history of the United States. We're seeing extremely high grades. It's got a published resource of approximately 1%, but we're seeing some very, very good grades there, which is very positive. We're continuing doing the development work to the ore body there. We put in a drill station, and we plan to be doing drilling at the Juniper level in the next few weeks. So we're doing development, and we did ship some ore to the White Mesa Mill. Now, on the transport issue, that is well in hand. We're working very closely with the Navajo Nation on the transport. There was a lot of media on that. The bottom line with the Navajo Nation is there was a certain amount of fear factor, which is unfortunate because we have shipped the company over the last 30, 40 years with the uranium production in the Arizona Strip, probably something like 80,000 truckloads without any major incident across the Navajo Nation without anybody getting alarmed with that. And as recently as 2022. So some of the media on the transport across the reservation was a surprise to us. It was a surprise to it because we have all the licenses we need to go across the Navajo Nation on state and federal highways. There's nothing that precludes us, and there's nothing stopping us right now. We can ship across the Navajo Nation with all the licenses that were required, but we don't want people on the reservation to be concerned or worry about doing that. So we've had a couple meetings with the Navajo Nation. They've been very productive in the media. Even the Navajo Nation is saying they've been productive, and we're trying to go through a number of areas that they've been concerned about and make them comfortable. We've got another meeting scheduled, so we'll resolve this. I'm confident, but at the meantime, we don't have to ship right now. We have this development work that we can undertake, and we're doing it. I built that mine 37 years ago. It's super high priority for myself personally and the company, and we're making progress, and we'll continue to develop it in due course. It's not going to hold up any of our contracts at this point in time, but as I said, we have volunteered not to ship while we're working in good faith with the Navajo Nation to make them comfortable that this can be done safely. And I'm sure it can be because, as I said, we have shipped many, many, many shipments over years without incident. And so that's really where it's at.
I think with the mixed approach with the diversified assets in the U.S., I think it makes sense that you guys will be able to fulfill contracts with delay. There are no incidents, as you said, and there's been a history of success of doing everything properly with respect to transportation, and transportation is always a key issue. And I know you guys are very sensitive to transportation, including not only in-house transportation, but also outside parties who you might allow to send material to White Mesa. Transportation specification is very, very important and is regulated. Short of paying toll fees, I struggle to see, hopefully that they'll realize that this is in the best interest of community development and partnership, and also contributing towards a form of energy and products that is very, very much needed. Just with respect, I'll take a few other comments if you have those there, Mark, but also add in here some of the other conventional activities, LaSalle, some of the other stuff you're working on, just so you can bring the audience up to speed on other operations.
Yeah, we have a number of miners mining the LaSalle complex, and the LaSalle complex is really like 4 mines that are connected over 10-mile strike length of roll front deposits. And we have the La Salle mine producing as we speak. Now that's a uranium vanadium ore. It's around about 0.2% uranium and around 1% vanadium. We have a contractor in the Pandora mine that is just a mile or two away. They're doing the same thing. Between the two, probably about nearly 50 people working at those two mines, and they are pulling out ore as we speak and hauling it to the mill. So we have that source of feed coming. Now, conventionally, we've also are getting ready to build a water treatment plant for the Whirlwind project, which is just on the other side of the La Salle Mountains, actually, which includes a mine that I was a partner in back in the 80s. So it's a really small world because I live not far from where that mine is. We actually have the permit for the water discharge, but just some modifications in the treatment plant, which we plan to go back into production at Whirlwind next year. We are also reinitiated the permitting at the Roca Honda project in New Mexico. We're advancing the EIS there. There's been a draft done, and we're moving that to the final EIS, a very large, high-grade deposit. And we have the fully permitted Sheep Mountain project in Wyoming that we're also looking at, and Bullfrog. So there's a lot of activity. There's a lot of activity on the conventional front, as there is at Nichols Ranch. And I think the thing that people don't really fully appreciate, we got 3 mines going. We've got Nichols Ranch that we're preparing, Whirlwind, that's 5 projects, and we've got 3 other development projects that are also in work. So no other company in the United States has that number of projects that are proven to deliver low technical risk like we do. And, some of these assets I go back with personally into the 70s.
There's a lot of stuff to juggle here, and you guys have been able to keep this moving. And once again, we're just getting kicked off here. So looking forward to seeing some of those results come out as you guys continue to progress these restarts and dusting these projects off and getting them up and rolling, and then getting them up to your expected levels. I know you're have very high expectations for delivering the max and squeezing the max out of these projects. And that's obviously going to take a little bit of time, and there'll probably be a few kinks and tweaks that'll need to be made. So I appreciate the comments on the conventional front and some of those efforts there. Want to just move away from operations here for a moment and talk a little bit on equity performance, Mark, which we've actually talked about this throughout the discussion already, but just to cover a few specifics here. On the equity performance specifically for Energy Fuels, and of course, in the context of the cycle, the equity price correction really is within reason, at least at my desk anyway, it is. Given the amount of time we've been here and the amount of corrections we've seen throughout a bull cycle. But there's a good sense so far that the market doesn't quite understand the dual strategy, and that this could be part of the discount in the equity, which from my perspective isn't necessarily a bad thing at all. But what comments do you have about how you see the valuation, the multiple strategies, and at what catalyst or point do you see the market giving credit for the strategy?
No, it's an excellent question, and it's a question I get frequently. I've said I've been in the uranium business this year 48 years. I've seen the peaks, the valleys, the long periods between drinks. I think the uranium industry is in really as good a position as it's been in the career and the time I've been involved with it. But it can be brutal when you get the price going up and down and sideways. That's why we've been adding this rare earth strategy, and it's the ability to process these radioactive materials. So it's not like just going down some other path that is no common denominator with what we've been doing. We can recover the uranium from the monazite, but it has confused investors. And I think the bottom line from my perspective is we are doing it for a reason. We're doing it for a reason, because we believe the strategy we're going down, playing the long game, not the short game, is best for our shareholders. Now, some shareholders want to be 100% uranium, and I understand that. Some want to be 100% rare earths. We're 100% energy transition. And so we've been putting these pieces together. And, when I look at it and I look at our models on, the uranium single commodity element with uranium mainly, I just see that what we're putting together is extraordinary. And we are, that the pieces as they come together, I think that the market is starting to realize that this isn't just, a distraction. It is actually going to get there. And I've never been more excited any time in my career than I am right now today on the path we've taken of playing the long game. You're right. I think some investors need to see a couple more pieces to this puzzle to fully understand what we've been doing. And I think those are just about to happen. I think the closing of the base resource transaction, we're at the witching hour there. It's been completely done legally, but it still hasn't closed. Final closing, which is just administrative, which is October 2nd. I think the market needs to see that what we've acquired with base is going to be put to good use, and that the suspension will be lifted on the Toliar project, which I don't know when that's going to happen, but I believe it could happen fairly soon. And then people start seeing the pieces coming together. Our goal is to have a multiple billion-dollar company that is profitable and can survive downturns in the market, be low quartile as a critical mineral producer, and does extraordinary things, not just ordinary things. I am not in this, Andrew, to do ordinary things. We are going to be a company that is hubbed around the uranium business, doing these critical elements, and the plan that we're executing that is going to happen, now I may be making a forward-looking statement here, is advancing for the right reasons. And to some investors that are confused, I apologize for that. I'm not trying to confuse investors, but let's just see where we are in the next couple of years. And I think it is going to be more apparent than it is at this moment. But the closing off of the base resources, when you look at that, the joint venture at Donald, the Bahia project, and the relationship with Chalmers is world scale. The size of Linus, about 75 to 80% of the China plan for the monazite structure. And in the energy transition space and in the heavy mineral sand space, we're starting to get very, very significant interest in how that is rolling out. So stay tuned. We'll see how she rolls, but I believe we're well on our way. And I believe that even though we didn't keep up with the Joneses of the uraniums over the last year, a lot of these stocks have retreated as we have, but we've now got this diversification strategy that nobody else has.
Don't worry about the forward-looking statements, Mark. As you know, the forward-looking statements are credited or discredited by the past-looking statements, which means results that actually come through. So always appreciate your comments on that. And you're taking a bigger risk here with this for an extraordinary outcome. And I can see how that pieces together quite well, but you're doing it from a foundation or a base load, as you said earlier, that allows for that potential success and that risk to be calculated and actually turn out most likely in favor in part or three-quarters or whole. And so I think that is the key message here, and I can see why initially there's that hesitancy to be involved because of that. But at the same time, it also offers opportunity for investors, and most often we've seen investors not get into equities when they should at the right prices. And obviously there is an opportunity at this point right now to take a pretty hard look at this. So I appreciate the comments there. And just to follow on that, Mark, one other part of this, which I think is important, is the matter of stock valuation, cash flows, the cash use in M&A, and further CapEx, of course, and then the consideration for how to best lift the value of the company over time, which I think you've, as you said just before, you've been working very hard on that with your visionary efforts to look forward and to look at a few things that are quite dreamy, as well as that additional leverage of this company and how this company is operating based around existing operations. So there remains discussion, of course, among investors about a mixed approach towards allocation of cash towards operational efficiencies, maybe some cash use in share buybacks due to the valuation, or even the initiation of some type of baseline or smaller dividend to start, or maybe all excess cash is dedicated to M&A and future CapEx commitments. Obviously, you have those. What do you think you should do here with this approach on these different facets of value creating demographic of investors who might be looking to seek a growth company that has maybe a baseline dividend? How do you look at this, Mark?
Well, the again, it's going to evolve with time. I mentioned over the last 18 months, if you look at the ins and outs of the 18 months, we've had around 100 million in net income with this, 200 million of working capital on our balance sheet, when others in the uranium space have not. And we've got projects operating right now. I think I touched on it. All these projects that are not uranium, the rare earths, they're all going to have to go through a final investment decision. So we're not going to be spending, hundreds of millions of dollars without clearing a hurdle on each one of those. And so, but as those hurdles are achieved, we'll start having increased demands, on our treasury to get those projects built. Now, having said that, we think there are a myriad of ways to finance those activities based on their merits, with non-recourse financing, with potential offtakes with other groups. We've hired the former global procurement manager from General Motors to help us on some of the potential offtakes on the rare earth business. She was in charge of procurement of global critical minerals for General Motors. She now works for us, and we have her working on the back end of the rare earth space. But then at the same time, we've got this building portfolio of projects. So when are we going to pay a dividend? Well, when we have enough surplus cash and we have the balance sheets to justify paying a dividend while we're in this growth mode. So, my goal is to be paying a significant dividend, to have these significant revenues. And as I said, this combined company will be in what I believe a much better position to be paying a routine dividend with the revenues and the margins that I see as part of this strategy. So I don't foresee a dividend in the near term because we're going to need that balance sheet to make these investments as they evolve right now. But we've definitely focused on a dividend in due course, but I'm not really in a position to say exactly when that would be.
Do you think it would be utilized? Again, I know different investors have their different opinions here, and of course, I have my mixed views on this as well. But I think there is a strategy to potentially catch all within a layered period of time, if I can say it right. I would suggest probably that share buyback would probably be the least a creative thing to do, at least at this point. Of course, notwithstanding further market washouts. But what are your thoughts there, Mark? Would that be kind of the last thing on your book?
When you're a smaller company like ours, and many of the others in the uranium space or the rare earth space, and you're in the growth mode, you want to make sure that you have enough cash in the bank that you can fund yourself properly. I will do whatever makes sense for the shareholders, whatever makes sense for the company, without jeopardizing either, to the best of our ability. So the key thing, as I indicated, is as we're moving forward and getting the uranium business back into order and into profitability, we've got these final investment decisions. Each one of them, Donald, could require funding up to $120 million over the next 18 to 20 months. Maybe if it's not successful, it won't be required, but that draws on that 200 million of working capital. You've got Toliara, which again, if it gets out of gets its full approvals, it's going to have a draw. So, I just don't want to give up our cash, buy back shares when we're at this kind of crossroads with these various activities that I want to be in a position to be strongly funded for. If we don't go forward with a project or two and the uranium business, uranium prices continue to increase, certainly not off the table. Absolutely not off the table. But at this moment, I would say, we've got a number of projects that are going to require cash if things go as I see them going.
Yeah, I can support that view, especially on a buyback. I think there's other ways to deliver that value. It might take some waiting time for investors, but I think there's better ways to do that. So I'm in alignment with how you're seeing this. And the risk involved with CapEx is a big issue in my book as well. So I think you have to make sure that you're well backstopped for that. So Mark, I appreciate the comments on that. And we've hit on a lot of things, not everything, but let's, why don't we leave it there for now? And let me close up just with this final question to you. For potential investors who are listening in, the company has a market capitalization of about 800 million US dollars. Why should Energy Fuels be considered within the institutional, family office, and retail investors portfolio at this point?
Well, if you look at our valuation, compare it with our peers, I can say that we are the best valued uranium company on its own, and forgetting about the rare earth side of this business, which is well advanced and is just now being unlocked. So, we are back to the strong balance sheet, advancing what we say we do. We're not promoters, but we're looking at this long game in energy transition in a way that others are not. And I'm proud of saying that. So, I just think if you believe in uranium, you can say, well, this company is undervalued compared to our peers, but then at the same time, they're acquiring these significant other projects, particularly like Toliara, which when we look at the feasibility studies done by Base, indicates a value at about a 10% NPV at $2 billion. Okay, like we said, we've got a market cap of a little north of 800 million and 200 million in cash. So I think the upside is extraordinary. If you believe in energy transition, this is a unique play. It's a diversified play. And I think that all the pieces to the puzzle are coming together. Just watch this space or invest in this space because, if energy transition continues on like I think it's happening, we are in an absolute, box seat here for this to happen.
Mark, I don't say this often, but certainly this company is worth at least a number of reviews. Quite compelling here, in my opinion, short of some bigger concerns in the broad market. But short of that, fantastic opportunity here. And I think folks need to make their calculations and make their bets here, as well as how they're going to enter in here. And hey, we'll save the energy transition and climate change for a different podcast, but I'll finish it up with just asking, what's the best way for folks to contact the company?
Well, Andrew, at the back end of our press releases, you can contact our, investor relations group. Curtis Moore, Kim Casey just joined us recently. People can contact me directly. I mean, if they want to reach out through the company email address or personal address, I'm always happy to talk to people. But at the same time, I have Curtis Moore and Kim Casey to also talk to investors as required. So, we're always happy to talk to people that are interested in our story and our progress.
Mark, really appreciate the update, appreciate the time, and keep up the work you've been doing with Energy Fuels. And we'll look forward to more progress here in the coming months. And of course, you're welcome back anytime.
All right. Thank you, Andrew. Always a pleasure.